Welcome everybody, my name is Karush AK and this is the Market Meditations podcast. We chat with fascinating people from around the world to extract mindsets, routines, stories and habits to help you build richer lives. Today I have with me David Belle. David is currently the UK Growth Director for Tradingview. He's author and founder of an incredibly successful business, Macrodesiac. This is a newsletter that provides actionable macro information in an easily digestible format. He's also an independent trader and has recently become a father. We're going to learn about David's unique trading style, his approach to building businesses, and how he manages to maintain his work-life balance. Hi, David.
Hello, mate.
Thanks for joining me. I'm going to start by asking you, what is the trade you've taken that you're most proud of?
I think it must be buying euro dollar back in March 2017 when it was trading at about 106, 106 and a half. And, it wasn't necessarily the trade that made me the most money or anything like that. It was just that every single little bit was correct. I said that my target was one spot 22. And I just managed it so amazingly well. That's probably 100% my mind. Pretty much all of the fundamental macro side that I had envisaged should become apparent, came apparent, and just how I managed it was just fantastic. And I really want to pat myself on the back for that one. Now, having said that, there's been a million that have been absolutely shite since then, but that is one that stands out massively.
So you get more satisfaction from the execution than the actual making money on a trade?
No, I think always the money comes first, but it's just on that particular one. I don't know what it is. I think it was because my overall view of the euro at the time was actually bearish, from a kind of sentiment perspective from myself. I think that you should be bearish the eurozone, for example. I think that the euro is a terrible idea, but I was willing to buy it in the face of this kind of bias that I had. And yeah, just in the face of that, it was more of just how I'd planned it out already, and really everything just came to fruition across the whole trade.
I'm quite a similar position with the euro. Just really doesn't make sense about trying to have this one currency across so many different not even micro country economies. What are your thoughts on why it's such a terrible idea?
Well, you have to really think that you've got 27 different countries in the EU. Obviously, I think it's 16 or 17. I can't actually remember how many are in the Eurozone, but irrespective of how many are actually in it, all of these countries are heterogeneous, okay? So you've got different cultures, different economies, you've got different demographics within all of these different countries. Now, that means that these different dynamics are going to require different policies to manage, demand, supply, across a kind of aggregate basis. Now, if you've got a singular monetary policy, it only allows for, maybe the strongest one or two countries to really, really proliferate and to really, really become successful. And in this case, I'm talking really about Germany, maybe even France, but they're maybe to a lesser extent. But really the countries that have, a positive target to balance, which I'll come on to in a second. And the other countries are left for dead because they require financing from the countries that are benefiting. Now, Target 2 is the gross real-time settlement system of the Eurozone. It's basically how individual sovereign central banks within the Eurozone lend to each other. You've obviously got the ECB, which is the overarching central bank of the whole block. But the Target 2 system is how central banks lend to each other. Now, Italy and Spain are hold massive liabilities within this system. And obviously that's reflected in their economies. I think even today we've seen that it was either today or yesterday that Spain's GDP has been the worst quarter on quarter decline on record. I'd expect Italy to face the same kind of issues as well. But these aren't new issues, you know. These countries have been facing massive problems for a long time, and it all comes down to the euro. Um, Italy's euro is overvalued by 30%, and Germany's is undervalued by 30%. Okay, which means that essentially Italy are losing out on a purchasing power parity basis when dealing with Germany and other countries. So, you know, it's totally unfair. And I think it's time to start thinking of the euro more as kind of a political project rather than just an economic project like many seem to think it is.
Why do you think so many non-German countries choose to stay a part of it when clearly it's giving Germany so many strong benefits, like an obvious one, which again, macro isn't my specialty, but I know manufacturing is extremely easy and cheap for them simply because of the euro. Why do the others, do you think, let that happen and not do anything about it?
Well, I think it comes down to, you know, obviously wanting to be a part of the EU. There's a status quo now to uphold. Um, there is, you know, even though I'm anti EU, not anti Europe, but anti EU. Um, I do think there are some benefits for some countries to be a part of the EU. And as a result, those countries that are obviously part of the Eurozone wanting to leave the euro would probably be a big indication of wanting to leave the EU. And that would be kind of a dangerous precedent to set for some countries. Um, I also think that the alternative in the short term, in terms of short term pain, where maybe a devaluation of a sovereign currency might be required, would be a bigger issue than what the euro are giving these countries at the moment. So yeah, there's that side of it. But it's multifaceted. As I said, you know, these countries are very, very different a lot of the time. The southern states have more in common than the Eastern European states, however. But yeah, they are still different in terms of demographics and whatnot. So it's different to come to one single conclusion as to why each country would prefer to stay in the euro than not. But I think as we see the ECB, you know, pile on more debt, see these inequalities between the southern European states and the central and northern European states come to fruition, um, I do think the situation will become totally untenable.
You have a really remarkable ability of explaining these concept ideas in a very simple way that's easy to understand. I'd say that's probably one of the reasons Macrodesiac has been so successful. I think, if I remember correctly, it's you communicate in a way as if it's you're having a pint with your readers at the pub.
Yeah, exactly. I mean, that's the voice that I want to put across because at the end of the day, I consider myself to be thick. You know, I understand things in the way that I do from the perspective that I do. Um, because I wouldn't be able to understand it with all these highbrow, you know, mathematical equations going around. I try to think of things as simply as possible, but taking a broader top-down perspective. Because if I were to get stuck in the intricacies of all of this stuff, you know, I'd do my nut. I would probably cry myself to sleep. Some of these guys that I speak with, they're way smarter than I am. So I find that if I'm able to try and boil stuff down into the simplest way from all of this information, um, that helps me. I don't understand it from a high level perspective. So I really have to work on and research and condense it into ways that my brain will manage it.
Uh, Einstein said that the ability to explain the idea simply is a mark of, I mean, you said thick, but quite the opposite, intelligence and quite thorough understanding of the roots of these ideas. If you didn't, it's the difference between parroting something and actually thoroughly understanding it. Perhaps it's not, it's more, it might take you a little bit longer.
Yeah, I mean, I I would agree with that. But I think what I do is I tend to try and kind of use a mental model or a couple of mental models to separate, what's bullshit from what I need to really focus on. So that's where I excel. So I think you're right in terms of being able to explain a complex idea simply is the sign of being highly intelligent or whatever. But for me, I think that my skill is being able to recognize what really to focus on, and when to focus on it, rather than necessarily understanding all of these different concepts in one go. So potentially that's where I excel at, and what I try to focus on with Macrodesiac is to really put what is important into context. I'll give you an example actually. So I'm pretty sure everyone's seen what's happened with the euro dollar over the last month or so. It's gone crazy to the upside. I think it was trading at 111, 112 back in mid-July, and it traded 1.2 today. It's come off, and I've been a seller of euro dollar for the last couple of days, and it's been a squeeze. I started selling at sub 118, sold, I think I got an average position at 1.186, and sold a tiny bit more above 1.19. And yeah, I took a little bit of a drawdown. But what I've been focused on is the fact that there are big inflation differentials between the US and Europe. And after what Powell said at Jackson Hole, my whole focus has been on the fact that the ECB are going to have to do the same thing. Now, what happened today was that, and by the way, the ECB have their meeting on the 10th of September. So, I was giving myself time to get short and to let the comments from different ECB members come through, which is what happened today. I'll tell you now. But the Eurozone's inflation data came out negative today. And just an hour or two ago, ECB's Lane, who is one of the economists, he's one on the governing council, I believe, he said that the euro isn't targeted by the ECB, but it's something that matters. Okay. Now, what the fuck does that mean? Okay, it's not. You've got an ECB member here coming out saying, "Oh yeah, the euro dollar rate isn't targeted, but it's something that matters." How much more targeted could you get if people are expecting something? Okay, and then you've got one of the ECB members coming out and saying, "Oh yeah, this matters. You should probably focus on this," right? It's just bullshit, and they just don't want to be declared as a currency manipulator. So the euro dollar, I think, may have found a little bit of a top at 1.2 for a little while, maybe for a day or two. Going into that September 10th meeting, I would expect it to push far lower.
Do you often trade against such strong moves against the trend based on, it seems based purely on macro. I could be wrong, and there may have been some technicals at play there with the decision you made.
Well, so in this case, what I was looking at was the commitment of traders data, and it showed that euro longs were net long by 197,000 contracts at the last reading, which was my last reading when I actually started taking the trade was the week before last. So that was an extreme net long position, and there was no real basis for it in my view, considering that the ECB would want the euro lower. Okay. At the same time, we had dollar shorts at a net record position for 2020, I think even for a couple of years maybe. So I was just looking at these two factors and thinking, there's got to be some mean reversion here. Okay, you can't have such a stretched position either way. So let's start selling it. Let's see what happens. And yeah, I've got squeezed a bit, but I'm happy to keep selling at these levels. I think the thesis is strong. So we'll see. But I'm looking forward to seeing what happens and what comments come out of the ECB going into September the 10th. I think it could be a real driver lower. And I think a lot of people who have been selling the dollar heavily are going to get caught out.
So with Macrodesiac, not only do you explain these ideas simply, but you seem to provide, I'm guessing, this sort of actionable information all the time, which is the basis of your own trades. Now, this makes for a fantastic product, but that's not all it takes to make such a successful business. Outside of the trading side, what sort of challenges have you come across building what is now one of the most successful newsletters in the space? Congratulations, by the way. It's really a remarkable business you've managed to build out of it.
Firstly, thank you, mate. Naturally, you always want more people to join, but not too many so that your edge starts to get diminished. But luckily, with discretionary stuff, it's very, very difficult to diminish an edge. But yeah, thank you for that. So the challenges that I have come across, firstly, with starting any business, it's all about opportunity cost. Do you put your time into one thing over the other? How do you ensure that you're optimizing your time to make sure that you at the end of the day you're making the most money or you're getting the most enjoyment, whichever reason you're starting a business or doing anything for. I think that's a really, really big balance. Naturally, recently I've become a dad, so that has been possibly the biggest challenge ever. More from the fact that you just barely sleep, but yeah, that's another thing. But yeah, I think if you're not really pushing to do as much as possible with your time, especially as a younger person, then you've really got to take a look at yourself. I'm very lucky that I've got amazing support around me from my partner, from my parents, friends, old colleagues. I've even got an old colleague that writes for Macrodesiac now. He's been in the space for 30, nearly 40 years, and he's happy to write for Macrodesiac. So I think it's just about having a really good support network, and believing that you can constantly commit to doing something. I think that's it. Not that you can just do something, but that you can actually keep going with it, because it's not always going to be, all sunshine and fucking rainbows. But yeah, as long as you keep pushing through it, then that's probably the biggest challenge, is keeping something consistent and just doing it.
Consistency has actually been a recurring theme on the podcast. Every successful person seems to say you just got to keep going through the challenges, keep doing what you know works until the obstacle, which inevitably will come up, which makes you no longer want to keep doing what you already know works. Once that obstacle comes up, your mind starts panicking, having doubts and worrying as to whether or not this path will continue in the right direction. What sort of obstacles have you faced with Macrodesiac?
Oh, that's easy. So I launched an app. I was really excited about launching an app and creating an advert. And it was absolute dog shit. It just didn't fit. It didn't fit the community at all. It was slow. The developers just didn't want to take any feedback. And it lost, quite a few subscribers, because I think the engagement just dropped straight away, and people just didn't enjoy it. It was just like, it was just really, really rubbish. So that was one. That was kind of in when was that? March, April, maybe May.
I remember that. That was Macrodesiac. I remember that. I was
Yeah.
wondering where that went.
Look, I was happy I did it. It was fun making the advert, getting the advert made. The advert looked quality. And I can say now that I made an app and an advert. That's just how I think of it. But yeah, it was total shit, mate. And I really should complain to the developers more, but whatever. I don't really care. But that was probably the biggest one, because I did see a big drop off there. And it's like, you want to keep everyone together, but if they start going, then there's nothing you can really do. But yeah, that was probably the biggest mistake.
Was that a drop off in customers, in motivation? You lost team members? What was the actual cost of that mistake?
No, just people subscribed to Macrodesiac. I guess at the same time, COVID did hit, so I don't know if it was the same. If it was just that, but yeah, maybe I'm just thinking primarily of that rather than the virus that has seemingly decimated our economies.
Imagine you have a time machine. You get to restart Macrodesiac from the start. How would you do it differently?
It's a very good question. I know. I would 100% get on. I would 100% get help earlier. So I would delegate a lot faster. I guess you need time to prove the concept to yourself and to be able to make money to, pay out from profits, I guess. But yeah, I would get help sooner, and get kind of accountability from someone else who has a vested interest in, the business doing well. And that's why I brought on Tim, who's fantastic at, you know, processes and just getting through the tasks that I just don't want to do, like all the back end stuff. I hate that shit. But Tim's fantastic at it. He just gets through it, he does it, and he tells me what needs to be done for my own business, which is great. Keeps me on track, keeps my head down.
I love that you said that. I've got a very similar mindset where I've been working for myself since university, and the most valuable asset, which I only realized too late to buy, was my own time.
Mm.
Reinvesting money, the best place to put it is to free up more of your time so you can do more stuff to make more money. It's the best way to leverage your money, even more so than any traditional investment.
Absolutely. I couldn't agree more. And I never realized it until I actually, got down to doing this. I could understand it maybe from, if you think of it from a trading perspective, automating as much as possible. Um, that makes total sense. But until you actually get down to doing it, and recognizing that your time is really, really valuable, um, you just don't see it.
Did you have a problem with? So the biggest difficulty I had with it was letting go of my need for perfection with everything I did. So if I delegate something and someone doesn't do it, not even perfectly, but exactly how I would want to do it, I would struggle to accept it and waste a bit of time trying to fix it. Did you run into that at all?
No, I mean, today I even told, sorry, there's another guy that works at Macrodesiac as well, Sam. He wrote a note, and one of the one of the pictures wasn't in an image box properly. So I said, Sam, this is how you do it. After that, I don't care. He'll know how to do it now. So it's just a mistake that no one else will notice. I'll notice it. But after I've told someone, it doesn't matter. I don't I don't struggle with accepting it as long as they don't do it again.
That's quite zen and self-aware of you. I like it. I imagine you make quite a good boss at Macrodesiac.
Oh, you got to ask Tim and Sam.
Yeah, I'll bring Tim and Sam onto the podcast to talk about what kind of boss you are. So, David, I'd like to go back to something you said earlier. Now, I always preach quite strongly that one of my biggest edges that allows me to be successful in trading is the fundamental understanding of mathematics. The fact that if I see, for example, a moving average, I know it's not this magic line that the price bounces off of. I know it's just showing the mean of the closes of the past prices, and that just helps represent the average direction of the price, or trend, if you will, deviations from the mean. And that kind of translates into every technical indicator I personally use. And even more importantly, it goes into the system development risk management side. Things like expectancy, risk of ruin end up coming quite intuitively. And you said maths is not your strong suit. How do you navigate these more mathematical concepts in your own trading?
When I say maths isn't my strong suit, I'm talking more of the higher level stuff that you see in the academic research papers and understanding the models from that perspective. If someone were to explain a model to me in words, I'd be able to get it. If they explain a model to me, with mathematical notation, it would take me a long time to figure out exactly what it's trying to say. Things like stats, for example, because it's tangible, because I can understand, how do I put it? Things like mean reversion, for example. Okay, most things that people are looking at on charts or reasons as to why people believe something should go up or down is actually down to mean reversion, in my view. They're anchoring a certain point, and they're expecting, the series of data that they have to return to this specific point or to move to this point based off of something. It's probably a human bias. Easier maths like that I can understand because it's tangible. You can understand why that would happen. But when it comes to these really really highbrow stuff like
multivariate analysis,
yeah, at uni I really struggled getting through all the maths part. With the statistics stuff and econometrics, it was easier, as I said, because it was tangible. You have an actual data set based on real things and whatnot. But with more abstract concepts, I'm hopeless, mate.
Do you ever think that, I think Nas Taleb said, trying to predict economics is like similar to trying to predict the weather, except every single raindrop is intelligent. When you hear the macro side put into context like that, do you ever have the thought that maybe your trading is a anomaly and simply just a deviation from the mean and happens to be successful for that reason? I mean, I've been doing it 4 years now and have been lucky enough to be successful, and that thought crosses my mind sometimes, even with the technical data backing it.
So I think there's a couple of different kind of things going on there I can take apart from your question. Firstly, I think Taleb's talking about economists. So economists who never have any money on the line, apart from their own reputations, apart from the academic journals that get peer reviewed by their mates, who then go and have circle jerks about this new fucking theory they found that is absolute bullshit and with multiple different errors in it. If you take Andy Haldane, the chief economist of the Bank of England, back in 2017, he apologised for the errors in Brexit forecasting, for example. If you take the Phillips curve, which is notoriously being used in certain policy-making decisions, you would see that it's totally kind of fraudulent, and it was literally written on the back of a napkin. Traders would understand that these forecasts are wrong, or a lot of them would. Economists don't, because they don't have any risk to saying things. Do you know what I mean? So coming on to the next thing, I think that if you look at the data from, so there's a paper from the CFTC that shows who high frequency trading firms take money from. And you've got aggressive, passive, opportunistic, fundamental, and something else traders, I can't remember. But basically, high frequency traders take money from firstly other high frequency trading firms and also opportunistic traders. They do not take money from fundamental based traders who will be position traders who trade over a longer period and largely discretionary. Now, why is that? Because you can't really model discretionary beliefs or discretionary trading styles because it's discretionary. It changes all the time. So I see a lot of people talking about technical systems on Twitter, and I think that they're really really doing themselves a disservice. I think that firstly, a technical system is likely to be arbitraged away. I also think that it creates a lot of anxiety because you tend to be trading on a shorter time frame. And also, I think that it doesn't allow for adequate risk management because you're basing a lot of your decision making on only a handful of visual cues, essentially. I think having a totally different outlook on the markets, and this is more for traditional markets. Crypto technical analysis forever, absolutely. For traditional markets, I do think that taking a purely technical mechanical view is pretty damn difficult to do.
David, if I may, funny you said that. Crypto is primarily what I trade, And for a while, I had focused purely on technicals, as in I would deliberately ignore any tweet, news article, any sort of macro data whatsoever, and literally just trade it as if it didn't matter what asset it was, just data on a screen. And this year, one of my friends actually, who's hugely successful and managed to turn, I think, 50K to over a million now, absolutely insane, uses a huge amount of discretionary data in his trading. Now, I don't know if maybe he just took on a stupid amount of risk and did really well, but to consistently do that over such a large number of trades, even if his risk of ruin was extremely high, he definitely did have some sort of edge. And since then, I started incorporating a bit more discretion, taking into account market sentiment, using common sense. For example, when you see that DeFi is the craze, DeFi is literally what's running the current bull market in crypto, you immediately put a bit more attachment towards the performance of something like Ethereum or Link, which are super linked to the biggest driver of the market. And these sort of discretionary things getting incorporated into my trading took every single metric up. And now I deliberately adjust my systems to incorporate more and more discretion into them.
Exactly. I mean, I think I spoke with Cantor and Clark, Ryan, about this a couple of weeks ago. I just dropped a comment on one of his tweets and said one of the biggest problems that I find is exactly what I said with mechanical strategies. And he said something pretty important, is that when you start off, it's always good to be mechanical and to try and repeat the same thing over and over again. But as you get more experienced, I think discretion allows you to recognize all of the situations that you've been in the past, almost subconsciously, and to quickly allow you to make a decision, almost like a heuristic. If you've ever read Kahneman and Tversky.
Think fast and
There you go. It allows you to make a decision based off of prior activities, what your brain's remembered before. And that gut feeling really comes into things. And I think gut feeling is a lot to do with good trading in the end of the day. Sorry, go on.
I have a theory that it's the only way we stand any chance against AI. The infinite variables our brain processes to formulate its discretionary decisions, or even if it is randomness. I'm sure you're aware, but in statistical models, it's really, really difficult to differentiate just chaos from something that's run on an algorithm with multiple variables. It's really hard to differentiate between the two. And in my mind, that's the only way we stand any chance against AI picking up every single inefficiency in the market.
Yeah, no, absolutely. I think AI. Okay, so I've got a problem with AI, especially in trading. So where AI is right now, okay, is it's mainly on desks which are optimizing execution. It's not actually deciding any direction or anything like that. So in FX, for example, an FX dealing desk that might run AI algorithms will just be looking for transaction cost optimization, liquidity optimization, that kind of thing. There's no real directional bias there. And I think that where AI is operating most on is actually competing against other, or will be competing against other AI programs on such short time frames that they're basically market making. So you've got your Citadels, your Two Sigmas, your AQRs. John Simons is John Simons. Simons is firm. Renaissance. I don't think that it will become mainstream to the extent where really we are competing against. Maybe in the future there will be AI that ends up being able to determine longer term directions before a trend even starts. But then again, I think it will be arbitraged away. I think it will just be negated. So I still think the human brain is the most powerful tool that we that is available. And at the end of the day, AI has to come from a human brain. It might be able to do calculations faster, but to discern sentiment, I think, is a totally different ball game, and only we can do that.
That's a really refreshing answer. Even on the technical side, we have hope. Most people I talk to do go with the doom and gloom answer of, yep, it's all going away. But you definitely made some strong arguments for why it won't. So I'm going to go back to something you said about work-life balance. Now, this is selfish of me because it's a personal curiosity. You work at Tradingview.
Yeah.
You trade.
Yeah.
You run Macrodesiac. You manage a relationship.
Mm-hmm.
And you have a baby now.
Yeah.
How on earth do you make that work?
Well, if you think of the job, okay, work at Tradingview, do Macrodesiac, and trade, how much more complimentary could they get?
That's a very good point. That is a really good point.
You know, you literally cannot get more complimentary than those three. While I'm doing one thing, I'm basically doing the other.
So it's about optimizing that, like you said earlier, with the opportunity cost. You make every decision help another. Like so many of the projects you work on can compound onto each other.
Exactly. That's it. And sometimes, you know, the biggest opportunity cost might be that I can't, you know, go out for lunch with my girlfriend or something because I'm working. But then you make up for that at other times. But for the actual work earning money part, it's all totally complementary. And you know, the, the the best thing as well is that I trade longer term now. I gave up day trading because it just stressed me out. So I've got time to do these other things. And you know, if I'm sitting in front of a computer all day anyway, for all of this, for the other two things that I do, then it just makes sense to trade longer term and to not stress myself out.
Right, David. Now, I know my girlfriend gets really annoyed sometimes at the amount of work I do. She understands that she's supporting, but for example, recently I went a little crazy with work, and for the past 2 weeks, I think I've been working from say 5:30 to 10, 11 at night, religiously, just because I get super caught up and passionate in a project. And with all the stuff you're doing, even though they're complementary, I know there have definitely been periods where that's happened. How do you keep the relationship going during those periods?
Have a child. No, I'm joking. Don't
just lock it in.
Yeah, exactly. You just find time. You just make time, don't you? At the end of the day, it's the little things that matter more. You know, it's not always about kind of just going out and doing anything. It's just about, you know, chatting and kind of just always keeping a little bit of a good connection going on, even with just tiny things.
So now that you've got I think you've built a 7-figure company, you've got this career.
I wish.
I mean, if we take valuation models, I think most people would value it around there.
Oh, mate, with current PE ratios, call it, you know, $3 billion company. Why not?
Okay, well, let's say a hugely successful company, a job you're very happy with that works synergistically with your trading and newsletter. What's the next goal, man? Like, I guess the kid, actually. I think I might have just answered the question.
Yeah, hopefully keep her alive. That'd be good.
Oh wow, I got morbid. Yeah, that'd be a good idea.
Yeah. No, just keep going, and you know, I think yeah, just I don't really like to plan stuff like that. I like to just keep going with things, and just to see how they turn out. As long as I'm, you know, trying my best and carrying on, and yeah, just kind of just getting on with stuff. You know, I've never really planned anything. I've always just kind of made friends with people, always had good relationships with people, and then ideas have just developed.
That's honestly the best approach. I fully agree with you there, where like you can plan and there's nothing wrong with planning, but there's so many variables at play and you never know what life's going to throw at you, that if you do end up planning, chances are your plans, you're going to have to pivot from it about 10% of the way in, and you may as well have just focused on, like you said, that consistency. Find a path which gives you contentment, growth, and just contentment and growth. Keep following it and see where it takes you.
That's it, mate. I don't think you can really want anything more.
Okay, well, David, we started asking what was the trade you're most proud of. Now I want to finish asking, what's the trade you're least proud of?
Getting long XRP.
You did what now? My audience is not going to like this, David. Please continue.
Mate, it made money, but it ended up being total dog shit, didn't it? I don't think it'll attain the kind of fundamental input that I thought it would. It seemed like a really good idea, and it seemed like there was real space for it. But I think it was really a pump and dump.
I don't know how closely you've been following my feed, but I got absolutely torn up the other week because I mentioned a slight joke. It was one tweet where at the end I said, no one cares about XRP. I had 100K plus accounts attacking me. The XRP army is vicious. Like, these sort of cult mentalities you see all over crypto. Now, I'm not too into social media on the more legacy market side. Do you guys get these sort of cult followings around your assets?
No, you don't. I think it's because people are attaching so much hope of finding the next 100x or whatever, that they follow the journey on so intensely, trying to hope that their asset recreates what they've seen another asset do. And at the same time, I think that they might be holding really small accounts and be over leveraged a lot of the time. That's one thing that I noticed the other day when Bitcoin started to slide a tiny bit. I was like, you guys that are calling for bearish markets and are shitting yourselves, you've got tiny accounts and you're leveraged up 50 times, aren't you? Yeah, just admit it. 100%. Like, that's exactly what I was thinking. I was seeing some of these tweets.
You know what? Whenever I make memes expressing that as well, they do so well because everyone deep down just resonates with it.
No, of course. I know what it's like to have squeaky bum time. Euro earlier today, I was fucking offside by 200 ticks. Risk was managed to a certain extent, but
that last tells me it may not have been.
Yeah, I was like, shit, what's going on here? But no, the what happened came to fruition. That's what I was thinking would happen. An ECB comment would come out, and it went okay. But I do think that sometimes a lot of people tend to be too over leveraged, and that's why you see some of the sentiment that you do. You see some of the anger. You see some of the disbelief occurring.
Perfect. David, that was a fantastic episode. Thank you so much for your time. Thank you so much for tuning in to another episode of Market Meditation. If you enjoyed yourselves and you learned something here today, do consider subscribing to our newsletter to receive news, analysis, and education directly to your inbox 3 times a week.